Hello friends, welcome to the Forex Form Guide, where we take a look at the major currency pairs each week through the lens of WD Gann analysis. If you're new to the channel, welcome. I have put together a playlist at the top of the screen of videos that I think would be helpful for you to start with. And just a small request, if you do find value in the video, I would appreciate a like and a comment. It does help the video get pushed out to more viewers. And if you haven't already done so, you can subscribe to the channel to keep up to date with my latest videos. I usually post 1 to 2 videos per week. In this episode, we'll be taking a look at the Aussie dollar US dollar, the pound, and the euro US dollar, and the US dollar Japanese yen. Before we do that, a quick disclaimer: this video is for educational and informational purposes only and should not be considered financial investment or trading advice. Bottom line, do your own research, trade responsibly. So we'll start with the Australian dollar US dollar. If you didn't catch it, my forecast dates are up on the channel so you can see those. And again, for those who are new, I like to employ Gann's technique from Wall Street Stock Selector, page 46, where he lines up his different time frame charts side by side. I think it's very, very important to always look at multiple timeframes before you try to make a decision on a market, whether that's a currency or something else that you trade. And if you're looking to delve into this style more deeply, 2 sources that I would recommend. Number 1, Gann's book, How to Make Profits in Commodities, and number 2, Safety in the Markets Active Trader Program online training. If you've been following the Australian dollar, you'll know that we've tested the 75% retracement level of the 2020 to 2021 range. And at this stage, it looks like a false break of that level. We've held that, snuck back above the 62.5% retracement level. And this week, we finally saw a down week on the Australian dollar after our low on the 9th of April and very strong run up. So we have seen the end of that weekly upswing. So far, we've had a pullback, a little run up and run down there. These are tricky because that could be the end of the whole weekly downswing, and that's how I was reading it. However, even though we shot up there into a little lower top there, we did come down strongly on Wednesday, Thursday, and Friday to very close to these lows over here. So a little bit of a sideways action there. When you're in a period like this where the monthly chart has been running up, it's showing strong uptrend, the weekly chart is showing strong uptrend, it's not unusual to see a pullback being a little bit weak and choppy. So far, that's what we've seen here. However, there is scope for this to break down through here and have a little bit more of a stronger run down. So we'll keep an eye on that. It was setting up. I liked the look of this on Thursday. We hit the 75% retracement overnight, setting up into Friday morning. This is on the 4-hour chart. This run down here is this daily swing down here. So if we have a higher bottom on the daily chart, that probably indicates that the weekly downswing is finished. Not guaranteed, but there's a good chance that it would be. And we had contracting ranges down there into a 75% retracement. On our swing chart, we had an expanding range up here on the daily chart compared to this range here, and then an equal range down there compared to this last run over here. So it was looking good. 75% is not a bad retracement level for the Aussie to fall onto. And when you're looking at these resistance cards, which you can learn about in How to Make Profits in Commodities, I normally watch from 25 to 75. That gives me 5 levels to watch. And when you get to 75%, it's kind of the last chance for the market to rally from. And it looked like we were going up on Friday evening. We got stuck on this 50% level though and came down. So at this point, even though my next forecast date is for around the 18th and I was looking for it to be a high, so the 18th obviously is today, but that could come in Monday, Tuesday. You've got to allow a couple of days for these, and I was looking for a high there. We could easily go up Monday or Tuesday, particularly with the RBA cash rate announcement in Australia coming out on Tuesday. There could be some wild swings there, but it's certainly looking to me at this point that that level is probably going to get broken and go to the downside. So what would that mean? It's not the end of the world. It just means that there's a little bit more to go in this weekly downswing here. And at the end of the day, all we're looking to do as traders is make profitable trades in the market, generally speaking, in the direction of the trend. So if the trend is up, we look to take long trades. Whichever market that I'm trading, whichever cycle it's in, I'm looking for what I call points of force, where you have a number of these milestones all coming together in a really tight cluster. And I like to take trades, put a stop loss very close to that level where I think it won't be broken. And then once the market moves up a bit, move my stop to break even and get on with the next trade. So I do have quite a few break-even trades, but I also have far fewer sleepless nights than I used to. And that's the benefit of that style of trading. The high reward to risk ratio is nice as well. So for the Aussie this week, I'm having a little bit of a bet each way. I don't really care. I'm not in it at the moment. I did get stopped out of this trade for a break-even, so no worries there. It would not surprise me to see us run up. If we run up, I'm looking around the 65.55 level. And the reason for that, I'll discuss with you in a moment. If we do go down, I'd be watching the 37 and the 50%. I don't think it would go to 62.5%, but these levels are always in place, so we do keep an eye on them. The reason I like the 65.55-ish area is that it would be a 200% overbalance of the last monthly upswing. that you can see there. You'll need some swing trading skills to understand that, but basically that run up there, and then we run it from the low down here, it would be double that last run up there. That's a good sign of strength, and it would be hitting the 62.5% retracement from our September 2024 top. Keep in mind though that this run up has only been a single weekly upswing, which you see here, which is fairly unusual on any time frame. If you do have a larger time frame swing, like a monthly, if you drop down to the weekly, you nearly always get 2 or more weekly swings within that monthly swing. So again, that wouldn't surprise me in this week ahead to see us just pop a little bit higher, maybe pop up on some good news on Tuesday with the RBA announcement. That would give us potentially a monthly high and then a pullback there. Moving on to the British pound US dollar now. And you can see not too much happened this week on the pound. If we look at the daily chart down here, 1, 2, 3, 4, 5 bars, it basically closed at the same level that it did on the previous Friday. You can see that on the weekly chart over here. We did push down a little bit though into the 37.5% retracement level. Now this is at a really interesting stage. You can see on the monthly chart, we're sitting here at potential double tops. It's done this a little bit more quickly on the way up than we saw on the way down there. I don't think those double tops are going to hold. I still don't think that. I think that there's more upside there. It's just a question of, do we have a little bit more downside before we go up there on the pound? Looking at this weekly chart, is it over? Well, we have had a rundown on the daily chart, a pullback, and then an expanding rundown there, just a slightly expanding run down there. This run up here is starting to show some strength to the upside. It's run 1.5 times that last run up over there. Not quite enough to be what Gann would call an overbalance in price. And I spoke about that in last week's video called How to Spot a Market Turn. To me, it wouldn't surprise me either way. Do we go up a little bit more, or do we have one more leg down there? Gann said markets tend to move in 3 sections, 1, 2, and then you have a third leg down there. I could go either way on that. And if you look at the market, not just the pound, obviously the Australian dollar as well, and a lot of other markets, we have seen a lot of sideways action there. So it really could go either way. As a trader, I'm not worried about my forecasts, and it's really important for us to understand that. As a trader, I'm worried about my trades. My trades are what make me money. But for a trade, I identify a clear point in the market with a low risk entry. Look, for example, down here, you've got a daily chart pulling back here on the pound, sitting on the 37.5% retracement. Roughly an equal range there, slightly expanding there. But if you think that's a low, you drop down to a 4-hour chart. What do you have here? There's a first higher bottom setup, and it's a pretty small bar there. So you've only got about 20, a little over 20 points of risk there on this trade. And the market shot up nearly 200 points there. Now, it's not quite a 10-to-1 reward to risk ratio because the risk is slightly above 20, but there's probably a 7-8-to-1 reward to risk ratio in there just from a little first higher bottom trade there, coming off a resistance card level there. You don't need to be a rocket scientist. It's a bit of a cliche, I know, but you don't have to have a advanced AI trading system to come up with a high reward to risk ratio trade like that. Have a look at the double bottom video, the 16-to-1 double bottom trade that you'll see on the new to this channel playlist. That is the most simple textbook basic trade that you will ever see, and yet it returns 16-to-1 there. Do I take more complicated trades? Yes, but the best trades tend to be these simple ones, and you don't get them every day of the week, so you have to wait for them, but they are worth watching out for. And you just have to understand across multiple timeframes, what is this market doing? What is it trying to do? And is it having any success there? So here you might say, well, we're setting up for a higher bottom on the weekly chart. We've had 2 sections down there roughly equal. We're either going to get a run up and then that third leg down, or we're going to get a run up, and that's going to be a weekly run up there. So it's potentially a weekly run up. It's not a guaranteed weekly run up, but when you see a signal like this, a little first higher bottom on the 4-hour chart there, you can potentially take a trade, and refer to the disclaimer at the start. This is not trading advice or financial advice. You can potentially take a trade there. And these bars, they're 4 hours each, 1, 2, 3 4-hour bars later. So literally 12 hours later, you're up here. You can move your stop loss to break even. Probably when the market shoots through this high over here, move your stop loss to break even. Then it doesn't matter anymore. If the market turns around and comes down and stops you out, who cares? It's a break even trade. You haven't lost any money on it, but you've given yourself the opportunity for a high reward to risk ratio trade. Now, you wouldn't just get in here, watch the market run up and then watch it run all the way back down. You might watch the market run up, pull back, and then in here when it's really struggling, you might say, oh gee, I don't know about this, but I can lock in, say, 6-to-1 or 7-to-1 reward to risk ratio. I'll just take that and move on to the next trade. So you've got all these options as a trader. Moving on to the Euro US dollar now, and you can see that the Euro broke through a series of tops there. We've spoken about that for the last few weeks, and that's because it happened several weeks ago. But we're now at a really crucial point. This weekly swing, this run-up that we've had here, it's retraced to around that 50 to 62.5% level, or if you like to use the Fibonacci levels, 61.8%. That's probably pretty much bang on, 61.8%. I don't use 61.8% in this capacity on the resistance cards. I use the 1/8 levels there, but it's around about that level. It's also, if we look at this big run up here, it's the 50% point of that run up applied to this low over here. And that's another way Gann used the 50% level. And he says in How to Make Profits in Commodities, you can make a fortune just trading off the 50% level alone. I wouldn't necessarily recommend that, but that's what Gann says. I think you would use other rules in conjunction with that. But the point he's trying to make, and that I'm trying to reiterate, is that the 50% level is a very strong level to watch. So we've run up, we've just pulled back here a little bit. Not a bad place if the market turns around and goes up. How will we know if it turns around and goes up? Well, we drop down to a smaller time frame. Here on the daily chart here, pretty similar to the British pound. We had a run down, a slightly expanding run down here, and then we've had a little run up here. Is there going to be a higher bottom trade set up here? If so, the market would have to break this high here, which would be this one over here on the 4-hour chart. If not, if there's a little bit more downside, that's okay, because this is just a first monthly swing in, over here. This was a larger than a monthly swing over here. So, you could get a monthly pullback and then more upside from there. So again, at the end of the day, you're just watching to see what the market offers you. And here you've got a weekly chart that this run down here technically is an overbalance in price compared to this run down here. We're more than double that run down there. So it wouldn't surprise me to see a weekly lower top, even if we do rally. And that coincides with what I'm seeing on the Australian dollar as well. I'm thinking a monthly top is not too far away. We may have already seen it on the Australian dollar, but I'm thinking it's not too far away, and we'd see a pullback from there into a higher bottom. Well, this is our 2025 low on the euro. Same sort of setup. If we have a little run up, that's a weekly lower top, and then a run into a higher bottom, which would be a higher bottom on the monthly swing chart over here. Now, a higher bottom on a monthly swing chart, if you can find a price cluster there and get a small risk entry, that's where you can get the massive reward to risk ratio trades. Let's say that you find the low. Let's say that you find the next monthly low and you get a 20-point risk there. Well, this run up here from 102 to 116, that's 1,400 points. If you get in with 20 points of risk, if the market is able to repeat that 1,400 point range, that's a 70-to-1 reward to risk ratio without any compounding at all. And if you're looking at a monthly swing, there are going to be, in most cases, there are going to be opportunities to compound on the way up there. So interesting times on the euro there. I could go either way on this. Full disclosure, I mainly trade the Australian dollar. So during the week, I'm looking at the Australian dollar. I'm living the Australian dollar. I mean, I don't live in front of the computer, but I check it multiple times each day on those 4-hour bars as they appear and zoom in from there when I'm looking for an entry. The euro, the pound, and the US dollar yen, I only check once a week when I'm doing the Forex Form guide. To me, technically speaking, that is an overbalance in price on the weekly chart. So I would suspect the next run up is a weekly lower top there based on this overbalance. If I'm wrong and we have a strong run up here and then a pullback there, well, we're dealing with a range here. You've got a pullback. You can target that sort of range again going up, and you just wait for the next pullback there, say on the daily chart, and you look for your entries there. At any given point in time, there's generally a high reward to risk ratio trade each week on most markets. It's just a question of how many time frames do you want to watch, and do you want to look at, and do you want to trade. Most people don't want to look at, say, a 1-minute chart or a 5-minute chart or a 15-minute chart. So looking at the bigger picture like this, you won't get a high reward to risk ratio trade every day, and often not even every week or every month, but they are there and they do appear, and it is worthwhile keeping a list of charts like this. So always keep an eye out on your timeframes for first higher bottom opportunities. There's a first higher bottom on the weekly chart, not a very small bar there for entry. There's a little first higher bottom set up potentially on the daily chart leading into our April low over here. So coming up over here, that's where you've got a little pullback here on the weekly chart after a really strong run up there. And you can see on the weekly chart, the market has run down run up and given you a higher bottom there, there's a good chance that's the end of the weekly chart. So that was an example where you had a small bar entry and bang, the market shot up from there. There's a high reward to risk ratio trade. Only took you a couple of weeks to get that. All right, and last one we're going to look at is the US dollar Japanese yen. I've been looking at these triple bottoms here. I think the market is going to break them, but we're approaching overbalance in price territory here compared to this last run up here on the US dollar yen. So you can see the market's run at 1, 2, 3 weeks now, and it's approaching double that last range up there. Gann called that an overbalance in price, which would mean a change in the trend. So in the absence of higher tops, higher bottoms on the swing chart, the overbalance can tell you that the trend has changed. I go into that a little bit more in the video that I recorded last week called How to Spot a Market Turn. So it only needs to go a little bit higher to confirm that overbalance. So what would that mean if we do get an overbalance? Because I've said over here, I don't like those as triple bottoms. I prefer to see, whether it's a double bottom here, I prefer to see the double bottom break the low of the first bottom. And if it's a triple bottom, I like to see the third bottom break the low of the second bottom, but we didn't see that here. That's fine if we do go up a little bit there. You do have a trend line there coming on the monthly chart from that high down to the lower high there. I don't think it's got too far to go before it meets resistance and comes back down again. It doesn't look strong to me, and it may not even get all the way up to that level. But again, if you're looking on the Australian dollar for a potential monthly top, and then you're looking on the euro, say for a little weekly lower top, which would then give us a monthly top as well, well, those sorts of pullbacks may coincide with a rally on the US dollar yen here into a lower top before more downside there. I do think this is going down. That looks to me, for all money, like it will break that low there. Gann said the fourth time a market approaches a level, so there's 1, 2, 3. The fourth time it approaches it, it almost always goes through. So if we get a lower top here, that itself might be a good trading opportunity if and when it occurs. Probably looking at either later May or June for that to happen if it does, but you've got a lower top there, potential opportunity, and if it breaks through those lows there, that could have a really good run to the downside there. I'm targeting 116 there on the yen later this year or early next year. Looking at the week ahead, you've got, as I said, the all-important Australian dollar cash rate and RBA monetary policy statement coming out on Tuesday at 2:30 p.m. Sydney time. Now, the expectation is that we will see a quarter-point drop in the cash rate. So we'll wait and see what happens there. I don't try and second-guess the economic announcements. I'm just aware that there's something coming up. I don't normally take an entry around an announcement like this because the liquidity can drop out of the market just really, really temporarily. But when that happens, the spreads can widen a little bit and kick you into a trade that you don't really want to be in and then kick you out, seconds later as well. I've had that happen before. Not a very nice feeling. It's not the end of the world, but not a very nice feeling. So it's something that I do try to avoid. But it's also an area that you would watch for potential volatility. Then later on Tuesday evening, you've got the Canadian CPI figures coming in. On Wednesday, the pound CPI figures are coming out. Then on Thursday, you've got one of those flash manufacturing days, French, German, and pound manufacturing over here, followed by the US manufacturing and US unemployment claims on Thursday nights, and then some retail sales data on Friday night there. These red folders here are economic dates that are more likely to cause a more substantial movement in market prices. Although my viewpoint, as was the viewpoint of WD Gann, is that the news tends to come out at the right time and the market is going to follow the path that it's already on. Speaking of Gann, if you're looking to do some study on Gann, I have recorded the Tunnel Through the Air audiobook there. There's a playlist on the channel, so you can jump in and listen to that on the go if you're looking to decode some of Gann's deeper level secrets. That's all for this week. If you haven't already done so, you might like to subscribe to keep up to date. I do have a couple more videos following up from how to spot market turns coming out in the next couple of weeks. You might like to see those. And if you did gain some value from the videos, I would really appreciate it if you could just click the like button and leave a comment. It doesn't have to be a long comment. You can just say hi. You can ask a question. You can comment on something. You can make a request for future videos, anything like that. But likes and comments are engagement, and if YouTube sees that the video is engaging, we'll send it out to more people. So it just helps me to grow the channel a little bit. That's all for this week. The Forex Form Guide comes out at 7 p.m. Sydney time every Sunday. So until next week, all the best with your trading, and bye for now.